We have Sunil Subramaniam as well as Kunal Bothra and Naresh Mirani joining us on the show right now. And Kunal, let me come to you. Last trading day of the financial year. We are come next week. We will be entering into a brand new financial year and also a week which will be marked with a lot of news flows, volatile news flows.
Yeah, I think week, month, quarter, financial year, all of that happening for the markets today. But I believe that the close for the indices and especially in the last 1 month of the recovery would probably give it some hope that maybe all is not extremely negative or pessimistic for the markets. This recovery, what we've seen this last 1 month, almost 1,800 points recovery for the index and 2000 plus point for the bank nifty. I think that's something which the markets would probably want to take it with both hands and try and carry it forward. We've seen good sector churn, and even in this phase of the markets today, for example, the markets being a lot more volatile than what we've seen earlier. We've seen large cap stocks actually being a lot more resilient. Even on a day like today, there are a lot many stronger banking names, for example, which have been doing fairly well for themselves. So when you have such kind of a market construct where you see large cap stocks still acting strong, robust in terms of price action, even if there is that bit of volatility for the indices, the expectation is that the trend should be on the upside.
Okay, trend should be on the upside. There's of course one stock which is really nailing the gains there, and it's got to be BSE all the way. The fact that NSE deferred the change of expiry day, that itself has been a big trigger and big overhang lift for BSE, which has been fairly under pressure. Sunil, do you think the entire capital markets theme, as structural a story as it may be, do you think in the next 1 year too it can make money, as was the case past 2 years?
Yes, I do think so. This for me, the question?
Yes, Sunil, for you.
Yeah. So I think, yes, capital market story can make a big play. And reason for that is starts off with the 1 lakh crore giveaway by the finance minister, right? I'm sure a part of it is going to come into savings and investments, and a lot of that will get routed through mutual funds and equities. So I see brokers and wealth managers and asset managers and insurance companies, all of them benefiting from the flow. So I think capital markets are in. Bear in mind that the F&O and the retail equity trading is probably going to be down a bit. So pure stockbrokers and all may not see the same level of revenues they saw last year. But the rest of the ecosystem of the capital markets, I think, will definitely be a gainer. And I think the new SEBI chairman also has come out publicly with pro statements for both FIIs and DIIs. And I think that supportive measure will also play an active role here.
Very good afternoon to you, Sunil. Just I wanted to mark the flash on the bottom of your screen. You have news coming out from Informis saying that the High Court has said that the restaurants can't levy service charge mandatorily with food bills. So that's the latest coming in from High Court. And let's see what some of these restaurant stocks are doing at this point in time. Let's take a look at what Specialty Restaurants is doing, or for the matter of fact, Jubilant Foodworks or Westlife, I beg your pardon, Westlife Food. All of these counters, let's see what's the move there, and that initial dip coming in on Specialty. Also, you'll have Jubilant Foodworks. So let's watch out for this. We're yet to get the key reason why this sort of ruling has come from the High Court, but restaurants can't levy service charge mandatorily with the food bills. That is what the High Court has said. All right, let me actually go on and let's take a view on the entire exchanges pack, actually, Naresh, from you. Not just BSE, I wanted to know about MCX as well. How is this one looking to you on the charts?
So, starting off with BSE, it has made a strong recovery and we are back to that 5,400, 5,500 mark, which is where it was sustaining for a period of time. But 6,000 remains a resistance. For now, it seems like overdone in the near term, so would be an avoid. MCX similarly has been in a downtrend with lower tops and lower bottoms. Unless it crosses 5,600, the stock could continue in a slow drift downwards or sideways consolidation.
Avenue Supermarts, the company has added 3 new stores, and of course, CLSA is saying that the store addition momentum is quite strong for them. They've maintained and outperformed with a target price of 53.60, which indicates a good over 30% upside from the current levels. Kunal, you've been quite bullish on Avenue Supermarts, right? I mean, it's been your pick for the last, 3 odd days, if not more. Do you sense that 53.60, 53.50 plus levels is a possibility on the charts?
Yeah, it's a possibility on the chart. So the stock is building up its base over the last 2 years, 2022-23. and good part of 24, the stock has been holding on to this support of 3500 mark. In fact, this level was tested, I think, 4 times in this time span for Avenue Supermart. So which means that there's a solid base building which is happening for the stock at these kind of strong support levels. And eventually, when we see stock establishing a strong base or a support and then consolidating for such kind of a time span, you see these stocks making new highs for themselves. Just as an example, you've seen that happening for stocks like Bajaj Finance, HDFC Bank, Kotak Bank, where these stocks have gone through 2-3 years of a patch where these stocks have been stuck into a trading range or into a consolidation. But then whenever these stocks come back into a breakout or an uptrending mode, the first level of breakout is the previous major highs for these names. So I believe Avenue Supermart falls in that kind of a category. Would be surprised if in the next say 12 months or so, the stock actually scales past about the 5,200, 300 plus mark.
See, the markets are trading flat as of now. They slipped into the negative bias, but time to take stock of the latest changes to Chris Wood's greed and fear portfolio. Gaurav is standing by to tell us exactly what he's written this time around in that note. Gaurav?
Well, yes, Chris Wood's Greed and Fear, as always, coming up with new perspectives. When we look at the report, there are two main perspectives that we can highlight. So first, let's talk about the global scenario. What they're saying is that the extreme change in sentiment is what they're seeing in the US market from the investors as well as global fund manager. In fact, they have highlighted that biggest reduction in US equity exposure was ever seen in 24-year history of this survey. Other than that, they also believe that there will be a shift from US market to emerging markets. They believe that there will be a sell-off when US market will boom, and as a result, this money will flow to markets like European market, Chinese market, and other emerging markets. And there are two reasons. First is that they believe that allocation out of US market has already started, and second is that US still remains overvalued when we look at the growth of the stocks. Other than that, what they believe is that in terms of tariff changes, this is going to be a negative news because most of the countries' existing tariffs are higher than America. Lastly, when we look at Indian portfolio, they have done some kind of reject in the stock. So first, let's understand in terms of the real estate, they have actually reduced the position in Godrej Properties, and as a result, they have increased their position in macrotech developers almost by 1 percentage point. Other than that, they are also saying that investment will be made in DLF Limited, and on the other hand, some stocks like Make My Trip will also be introduced in the list. And as a result, when we look at some other stocks like Axis Bank, they will be reducing the position from there. When we talk about stocks like Zomato, the new age stocks, there also they are being a little bullish. They will be adding this Zomato in their investment list, and they will be reducing the weightage of TSMC. Lastly, let's also not forget that they are saying that they will be adding the exposure to Reliance Industries almost by 2 percentage point, and as a result, they will be reducing some exposure from HDFC Bank and SBI almost by 1 percentage point each. So definitely a new rejig which is coming up on their long only India portfolio as well, and definitely a new view coming up almost for the globe as well as the Indian market. So on the back of this note, we will be watching out on these companies and see what happens and how it turns out for investors.
Okay, that's quite an interesting take coming in the latest Jefferies Greed and Fear note. And quite interesting takeaways there. The fact that they've actually upped the weightage on Reliance by 2 percentage points and Zomato by 1%. Zomato, of course, is one stock that they've been extremely bullish on. They've also made some rejig in their realty portfolio as well. But before that, Sunil, wanted your thoughts on Reliance. I mean, everyone's been waiting for a demerger either of the retail arm or Jio. Where do you think the next big trigger for Reliance is going to come in from, besides, of course, the fact that the stock has really been beaten down in the recent market correction?
Unfortunately, I can't talk stocks. Sorry for that.
Okay. Naresh, what's your reading on the charts? Do you think Reliance is positioned to move up higher?
Yeah, so very interestingly placed. The stock saw the largest correction in the heavyweights. Went down below 1220, did not see any follow-up selling pressure. And now we're back in the middle at that 1280 mark. 1340, 1350 has been the top for the last 4 months. If that breaks, that would confirm a trend change, and we could see a much recovery all the way towards 1500 also. So for now, 1240 becomes a stop loss and upside. Watch out for 1350. If that breaks, we get to a reversal, and then plans could lead in the heavyweights.
Reliance. The other interesting idea, of course, has been the investment that they've made in the Indian online travel company that's Make My Trip, which is going to be introduced with a 4% weighting in removing the investment in Axis Bank. Sunil, what's the best way to play on this entire travel and hospitality boom?
I think both hotels as well as the travel portals and airlines. I think these three are the ones which are going to benefit. We've seen the Kumbh Mela recently, how all of these things spiked. And I think there's a huge, both medical tourism as well as religious tourism are probably going to drive the next wave. And it's not just international tourism, even domestic travelers, I think, are sharply picking up their thing. And especially airlines, I like because I think there's a huge shortage of capacity. There's a shortage of planes. We have a huge order for planes waiting to be executed, but it's going to take quite a few years to come. And some of the existing players have gone out of things. So I think those remaining players in the business are going to have a good time. And I see airlines as leading the play, and naturally, counters which are facilitating that, like you mentioned, Make My Trip and the similar kind of travel facilitators, as I would call them, right? And offering the complete one package solution, right? Right from train, bus, as well as airline to hotel bookings to transit from. I think that's something that people will look to do because nobody wants the hassles, right? They'd like to go to a one-stop shop and complete it. So I think all of the three counters that I mentioned, I think will do well in the coming thing, especially given the fact that this $100,000 rupee, sorry, tax giveaway, not all of it is going to be either saved or consumer durables being bought. People are also going to feel happier to go and travel.
Absolutely. Sunil, so good having you on the show today. Thanks for your time as always. Let's move on. Let's get you some closing trading ideas then on that note. Naresh, what's on your list?
So that would be a buy on Nykaa, which is clearly showing a lot of strength today. Very close to a breakout of the last almost 6 months. Breakout over 180 would make a trend change. So expecting this to break out over the next few sessions. Upside of 200, stop loss below 175.
That's quite a conviction that Naresh has been having on Nykaa of late. Kunal, what about you?
I'll go with HDFC Life, something which we discussed in the morning Chartbusters. Looks very interesting. The stock confirming a weekly as well as a monthly breakout, and especially after almost 3 to 4 months of a massive consolidation. So looks attractive for a potential target of 700 to 750.